Good weekend to you. This is Doc Severson for the ReadySetCrypto OMNIA trade of the day for Sunday, the 14th of February. I'm going to start out this weekend's report by having a little fun. Now, we've kind of done this before, but I think we have to go back and review the North Star from time to time to kind of give us that framework for how we should be thinking about this opportunity. What I'm starting off with here is the monthly chart, and this is a log chart on the vertical scale. Notice how it's not linear. It goes from 1.5 down here up to about 68 and 610, and then finally we're close to 43,000 up here. So this is a logarithmic chart, and what this does is a much better job of showing how markets really move over time. To give some context to this, let's go to the S&P 500. I know. Bear with me for a second here. I'm just going to go to the S&P 500 because we have much more time to look at something like this. Now, in this case, we have the S&P 500 from about the early 1970s all the way up to current days. So back here, the price was running around $100 for the SPX or the S&P 500 index, and now we're up to 4,000. So if we try to do this on a linear scale, it just doesn't make any sense because we have this, this is a true linear scale going from 0 up to 4,000. And you can see that markets back then didn't move in the same way. And the volatility is expanding because of inflation and money printing for various other reasons. But log scales don't really do a good job over time to show how something is moving. In fact, what I can do is I can go to the Dow Jones index back here, and the Dow Jones index is over 31,000 right now. And you can see how back in the turn of the century, around the 1900s, it was running about 65. And you can see the great financial crisis that we had back in 1929, the Great Depression back here. And then what you'll notice is that markets will do this, is that they'll run for a while, range expansion, range contraction in the 60s into almost the early 80s. And then we had the internet boom, and then we had the same kind of thing, range expansion to range contraction. And then since we've been printing money like crazy, we've been breaking out of that most recent range. The log scale really does a great job of normalizing things on a very, very long time frame where we have inflationary forces. But people tend to think in terms of linear charts, because what you'll hear is people saying, well, look at Bitcoin. It was just a few bucks not that long ago, and now it's just gone berserk. This is insane. This is crazy. But this isn't how financial markets move. We can't capture financial markets in terms of how the human mind thinks about them. And this is why we need to go to the log chart to understand really that North Star and really how things are moving over time in a logarithmic fashion. So that's point number one. Point number two is that we see markets moving through consistent patterns. They tend to have a very cyclic nature. And sometimes you really can't see that if you're looking at the linear chart. So in other words, we've had these great bull markets over the past few years, like from 2011 up to 2014. And then we had basically about 2015 up to 2017. And now we're on the next leg up. Now, if you've got a good eye, what you'll notice is that these swings up, these impulse moves that we've had in the past are about the same. They're about the same when we normalize them on the log chart. And that goes not only for the impulse moves, but also the corrective moves to the downside are approximately the same. Now, are they the same in numbers? No, of course not. We went from about 2 up to 1250. So this is 2 up to 1250 back here in 2012 up through 2014. And then we went from approximately 200 up to, as you guys know, 20,000 more recently in 2017. And now we have this big question of, okay, so we're going from about 10,000 up to what? To the upside here. This is the game everybody wants to play, right? Where is Bitcoin going to? And what I'm trying to show you is how we can use the log charts to kind of develop that target to the upside. Is it going to be accurate? Not on your life, but can it give you an estimation of what might be possible based on the cyclicality of Bitcoin? Yes. So what I want you to do is to count the number of grids that we have from bottom to top. So if we take this, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, about 18 grid squares to the upside for this move. Counting this move as well too, we're going from about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 grid squares here. Now, how can we make a projection based on this? Well, we could do this a couple of different ways. We could say the average here for the last two, which is not statistically significant, but we can say the average equals 16. We could do that for the upside. We can also play the pattern game and say, okay, every time we have the next swing, it's going to be 4 less. So if we just take that, the pattern being 10, so we're going to move 10 squares to the upside for the latest move. Let's use that because this is obviously the most conservative number that we can use, and we're not going to sound like a bunch of, wackos saying that, Bitcoin's going to go to 10 million because we averaged a couple of swings from the past. Okay, so what's our target if we add 10 of these grid lines from a logarithmic chart? Well, let's expand this out, give ourselves a little bit of room to work with. Let's count these off. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So the upside target for this is going to be somewhere, let's just estimate, between 380 and 820 is going to be roughly 500,000. And we can also see that the time series for these takes about 2 years. Each of these logarithmic swings has taken about 2 years from when it really gets kicked off until it finishes out. So if we use this cyclic analysis based on former moves and very conservative average projections for this, we could see that we may be sitting at 500,000 by March of 2022, a little over a year from now. Now let's get a grip for a second. Is it truly going to go that far in that exact amount of time? I don't know. I can't tell the future. We tend to make decisions more on the micro basis, like on a daily chart, unless you've got a super long time frame for this, which I usually don't. So we're making decisions on a day-to-day basis on the daily chart, maybe as much as the weekly chart. So this is just my North Star. This is just something in the background that helps me keep a bias for this to keep me pointed in the right direction, per se. So now let's go down to the daily chart and see what we can do about this. Okay, I've got the RSI Ligera on here, and we can see that we have a nice move to the upside, which is now getting into exhaustion. The last time that we had a swing like this, we came all the way back down to a 50% retracement. So if we were to do the same thing now that we're in exhaustion, although the weekly chart is not, let's get some targets here based on fib retracements, and we'll start out down here, take them up to the current top, and look at this. This is beautiful. This is really nice because what it's showing is confluence. The 38.2% retracement, which is sitting right around 42,000, is also coincidentally the former swing high. Former resistance becomes new support on the way back down. Now, there's no guarantee that we're going to come back down and test that swing again. This thing could just grind on to 500,000 and never really pull back. Wouldn't that be something? But typically we do see the former highs retested, although we did not see it here at 20,000. This thing was off and running at 20,000. Pulling back 50% of that swing, but not a swing test. So you could do the same thing here. You can put limit orders at 42,000, and that's probably the most aggressive play, to wait for a pullback to 42,000, although we might see as much as a 50% retracement, just like this one was, which would give you an entry at 40,000 or slightly below there, about 39,460. That's one way to do it, is to use limit orders, just sort of time bombs that you put out there, good till cancel, and you put a certain small amount in there and just allow yourself to be taken in to an additional piece of the position on any kind of pullback. The other way that we can play this is through cash secured puts. Here's Ledger X, and we're going to go back here. Let's see. Here's a series which is going to expire in just a few days. This one's just about toast. Here's the ones that we sold at 25,000. I can buy these back. Originally sold them for 1,200, and now I can buy them back for less than 200. Lock in a profit. At this point, I'm more likely to just let these expire and wait on the next pullback to come along. Now, if I were to look for the next pullback to come along, probably we're looking for something like March options, and we can do that 40,000 put. We can even do the 45,000 put, which is even more aggressive. This is a much more conservative way to get involved with the next pullback, because it allows you to get paid for the pullback. So again, if we are sitting there, let's just say this is 40K. We've sold a put at 40K for March, and we pulled in 2,300 for that. If the price ends up going higher, so right now the price is up here. Let's say the price is up here, and what is it? It's currently 48.6. So this is 48.6 up here. So if the price just ends up going higher, these puts that we sold will just expire near the end of March. If the price goes sideways around 48,000 for the next 6 weeks or so, again, our puts will expire. Even if it comes down to say like 42,000, puts will expire. It's only if the puts, or if the price comes down to 40,000 or below, are we looking at potentially being assigned, and we would be assigned the number of contracts that we basically sold. So in other words, if you sell a 100 micro contracts or mini contracts, whatever they call these things at Deribit, I'm sorry, this is Ledger X, then we would need $40,000 of capital to be able to absorb that. We'd be assigned 1 Bitcoin. That's certainly one way to get that. And we would make a return just on our capital, because we'd be paid for that pullback, of about 5.8%. So again, if you look at this, and we could do a better fill than 2350, but I'm just putting it down here to be conservative. So again, 2350 divided by the capital that we'd need for that, which would be 40,000, is, let's say, roughly 6%. 6%. Sitting there doing nothing. This is truly passive income. Now, if you don't have 40,000, if you have less than that, you could earn $235 on $4,000 of capital. Or if you don't have that, you could pull this down to 230 or 2350 on $400 of capital. So again, it depends on what you've got to work with, depends on what your return will be. Again, a much more conservative, but much higher probability of success than just buying call options in this market. Okay, back to the charts. I've got about 9 hours left in the trading day before we're going to print this candle and start working on the next one, and start working on the next week as well too. You can see that we have very mixed results today. Most of everything is in profit-taking mode. There's a couple of coins here that are doing really well, like REP versus USD is smoking to the upside today. Very, very strong. Even Digitex is starting, well, no, let's call that back. That's just a one-way dip, and we're still well below a penny at this point in our old friend Digitex. Let's look at some of the other coins that we have from swing trades, just standard altcoins being traded against BTC. Raven versus BTC appears to be starting to make a run for it. This is one of our former rock stars. Once upon a time was Raven during the bear market, but is got a long way to go at this point. Looking at the weekly chart, this thing has been in a long time decline for this. So this is just another bounce out of the gutter, so to speak. Don't get too excited on this one. We also have waves starting to make a move. Watch the volume is starting to increase on waves versus Bitcoin. If there's another way that you can get into waves versus spending Bitcoin to do that, I would advise that for anything. So if you can get into an altcoin through either fiat or some type of stable coin, that is what I would do and not try to do that. Okay. Also looking at the DeFi list today, DeFi list is in red today, a little bit of profit taking. These have been super strong lately, and so they deserve a little bit of rest and consolidation. This is entirely healthy and is not a reversal by any means at this point from these strong uptrends. So guys, I guess my final saying here is that you can look for a needle in the haystack. We are sort of getting into an altcoin market. Altcoin rally is starting to happen now, starting to lift off from the gutter. If possible, though, if you're going to play in altcoins, if you're going to look for low cap investing alternatives now that Bitcoin is a lot more expensive, then make sure that you enter that trade denominated in fiat or a stable coin. Thanks for listening, everybody. Don't forget, there is no report on Monday. No report on Monday. This is a federal holiday for the U.S., and that's one of our 8 days off a year that we're going to take. So thanks, and we'll see you back here on Tuesday. Take care, folks. Good trading.